Hi guys, I hope all of you are doing well. This is your Nifty Guy, and welcome to today's episode of Decoding Nifty with me. This is the series where we analyze and decode Nifty on multiple time frames so that we are well prepared to handle the next particular trading day with much more confidence and clarity. Right. So before we proceed, guys, there's a small announcement from my end. I will be traveling to Japan from around the end of this month for 2 weeks approximately, and I might not be able to make these daily videos which are there because I will not be trading, that is for sure. I'll not be taking even a single trade while I am traveling, however lucrative the trade might look like. That is a rule that I personally follow. But I will try to make these videos at the end of the day for you guys. There's a good time difference between India and Japan. So, uh, around post dinner, if I get free and I make time, if I can make the videos, I think I would be able to post them in time for you guys over here. But that is something which I will try. There's nothing which I can commit. I am 100% committed to making these videos every day. So far, I haven't skipped any single day, despite wherever I'm tied up or whatever is there. I have made these videos for you guys. So I'll try the same. But in case if I'm not able to do that, please forgive me, excuse me. And what I'll try to do in case if I'm not able to do the video is I'll post a small snapshot or a small video recording directly from my phone on my X or on my Instagram. The link for the same are in the bio of this channel out in the about section of this channel. So you guys can go and follow me there so that in case of me being unable to post this daily videos, you guys still be able to get an update of what am I planning to do with Nifty. Although I will not be doing anything, but I'll still try to post my analysis, right? So in case if you guys like the way I analyze Nifty and teach price action to you guys, please uh, like the video, subscribe to the channel, put down anything that you might have to say in the comment box. Also, share the channel with your other trading friends or trading community that you might be a part of. That will be really helpful for me. I'm still relatively new here, old trader, but new content creator on YouTube. So all these things will be very motivating and helpful for me, right? So on that note, let's start with today's video. First, we'll start with what we had planned yesterday versus what happened in the markets today, how did we trade that, how did we trail that, and then we'll plan the trade for tomorrow, right? Now, I am sure anybody who would have seen my videos for the last couple of days, I had clearly told not to look for any short opportunities in the market till the time this gap is not filled, till the time we are above this particular level, right? And see what exactly happened in the markets today. Plus, there was another concept that I was focusing on was the market taking liquidity near previous day's bottom and then moving up once we are in a kind of a positive or long trend which is there. And that is what exactly happened today. The market opened slightly gap up above our zone of entry, immediately went into a selling zone. Not selling zone, but yeah, immediately saw some uh, red candles, broke out below previous day's low, went back in, again broke out, inviting fresh new sellers, did not break the low it had created earlier in the day, and then it simply zoomed up from there, right? So this is exactly what I was telling about what happens near previous day's low. It would have been much more favorable on days like these when market actually close near previous day's low, then open flat or gap down, sucks the liquidity and goes up. But even today, it already gave a very good move from the top till the bottom of about 200 plus points. Uh, Took some liquidity from here, formed a base, went up, went sideways, for some time, then again gave a mega breakout, leading all the way up to we had reached 25,100, which is a good day which was there. I hope you guys made some good money out of this. The portfolios definitely they were happy today. But on an intraday basis, today was a hard day to trade for some people. What I have been seeing on X, I follow some people out there on who are into trading and especially option sellers. Yeah, price action like this would mean big wrecking ball for option sellers because on the day of expiry, when they are sitting on a straddle or on a strangle and just waiting for decay and then a one side move like this comes, that is where it takes away a lot of a big chunk of their capital. So yeah, mostly most of those trades were from option sellers. But now let us see what as option buyers or as simple intraday traders looking at capturing intraday moves, what could we have done around here, right? So there was no trade at the open. Definitely, we're not looking at shorting. We needed to wait. The market gave this particular move. Now, there was one trade because we had planned to go long above this particular high. One trade that could have been initiated around here once the opening high was taken out, but the SL was too big for this trade to be practically taken. Even on a smaller time frame, this trade would not have made any sense. So it was much more better to let the market give a breakout here, give us some kind of a pullback, and then continue. So that was the reason I did not take a direct entry around here. Like I say, before entering a trade, you should know your SL. And in case if the SL is big, try to go down to a lower time frame to see. So the lowest you can use is the 1 minute time frame, and even on the 1 minute time frame, the SL was coming just around here. Not much of a difference from this particular thing. So that was the reason I did not take a entry. Sorry. Once this opening high was taken out, I waited for this pullback. Now, once this pullback was in place, it got a little bit tricky around here, right? So look at what I always tell you guys is about a market structure. So that was the reason I drew this particular zone where market was taking support multiple times. So the market structure on an intraday time frame was clearly bullish, right? This was the first high, the low, then subsequently a higher high was formed. Now a higher low was in the formation, right? I tried to draw a, see, I switched down to 1 minute time frame, and I was looking at this particular consolidation and breakout from here with another thing. But then I wanted this particular zone to re cross this particular day high, which was of yesterday, the zone that we had marked. Right. So my trade happened exactly around these place when this started crossing. And I think I entered at a very, very good place. Now, the reason why I entered here was uh, of this trend line breakout. Definitely. The market did try to break it once, but failed. And once you're trading the breakout around here, the stop loss was very, very small. It was just around, was just below this particular swing. And the even if you would not have traded this particular entry, our initial planned entry, which was above this particular high with the pullback came, and once this high was taken out, if you would have entered the markets here as well, it would have rewarded you handsomely, right? So this is what was traded by me today. I exited somewhere around this candle. Uh, and definitely there was no point of looking at any short trades around these point. And another thing which I also observe on expiry days. So apart from the regular tools that I use on a daily intraday trading basis, only on expiry days, I open up the uh, open interest data from Sensible. And what I'm most interested in is not the open interest, but the change in open interest, right? So today, while we were in this sideways zone around here between the 600 to 700 zone, while we were going both sides of on in this particular zone, what I could observe was there was massive call writing on 25,700, 800, going all the way up to 25,000, which had the maximum call writing. And people were slowly exiting those positions. And once market started making this move above 25,700 and it was sustaining, I got much more confident that yes, a short covering move can be expected. When all these people who would be exiting their position, they would be adding fuel to the fire, which has already been lighted by the buyers, because their SLs would be triggering, and that would lead to a massive short covering, and that is what we saw exactly in the markets today. So it is only on the expiry days, which is on Thursdays, or in case Thursday is a holiday on Wednesday, when I look at the open interest data of Nifty while taking my trades or while planning such moves, right? So this was it from the intraday trading part. Now let's see what we can plan for tomorrow. We'll just delete this, and because a new high has been created, so this was a retracement zone. I'll delete this as well. This still remains as a valid gap support, which is there. See. Once we saw this particular candle, I told you guys, so this part is going to be extremely important. So please listen very, very carefully in case you need to rewatch this. When this big green candle had formed, I had told you guys the market is gonna be remaining sideways for some days now, right? The next day we saw a red candle. The next day we saw a small doji with prices whip showing on each side, not giving a clear trend or good trading opportunities on an intraday basis, right? Now that is something which is again can be expected in the Indian market. So uh, Nifty has although given a good closing above 25,000. We are above this particular resistance zone as well. We were above this on this day as well, but and we are roughly around 5% away or 1,200 odd points away from the all-time high. Now, whether the market is heading for a fresh all-time high or we are going to see some volatility around here, that is something we leave up to the market. What we'll do is we'll keep a very, very simple plan for tomorrow. All right. Say, for example, so market has given a very, very good move from the bottom of the day till around here. Let's say, for example, a market opens flat, right, around this zone, and then market breaks today's high. All right. You can enter into a call side trade, but that should be a very short trade as I don't expect the market to carry on this momentum for long directly from the start of the day, right? I expect if the momentum has to continue, I expect some retracement in the market, and that is where we will also get some discounted entries. For that, we'll be using our favorite tool, which is Fibonacci, to measure the retracements which are there. Now, if we look at this particular high above which we planned a long trade today with a pullback, this particular high which was taken out with this is coinciding exactly with the 50% mark of the retracement, 50 to 60%. So we'll mark this particular zone again as a important zone for us in case market opens with a gap down or in case market opens flat, fails to go up, comes down over here. This is where we should look at creating a long position with some good price action, and we can ride all the way back up here. So this is one trade that I am looking. So the first trade that I discussed was if market opens flat. If market opens flat, we should not look at creating a hasty long decision. If it crosses the day's high, we can expect some momentum, but I expect that momentum to be fizzled out very quickly. Uh, and for market to take some liquidity, market to form some price action so that we can get a good trade. Try to understand that moves like this are followed by trending moves like this are followed by volatility moves. And then again, we can expect some good trend or trending moves. So we need to be prepared for that. And that is what exactly what I'm telling you guys. Do not trade, or what I would also say is let tomorrow be a rest day. In case if you're not too experienced with the markets, let tomorrow be a rest day. See what the price is doing. But in case if you are planning on trading, these are some scenarios that you can look at. Flat opening goes up, take a long trade, but be quick to book profits and quicker to book, take your losses or trail them tightly, right? In case of a gap down opening, look at the price action around here. If we see a double bottom, triple bottom, good consolidation base formation, just like it happened around here, look at a long entry based on price action. But what if we open with a big gap up? If we open with a big gap up, I expect markets to come down, test these levels, form a base around here, and then again we can look at a long position around here. Right now, again, I will not be planning any short trades on an intraday basis. If you are planning a scalp for 10, 20 points, good, go for it. No problem in that. But those trades are also going to be risky if you are on a based on some price action set or setup that you might follow. If you see something like that, please take those if your system permits it, but take them in lower quantities than you usually trade with and trail them very, very tightly. All right. Uh, I believe tomorrow will be a day of exercising some caution. So please take care of that. Don't be hasty. Don't jump into decisions. And these are the two price action trades that I might look at. Again, around here, we can look at a long trade, which I already told you guys, but be quick to book your profits. So that's it from my side for today. I'll see you guys again post the market. Do follow me on X and Instagram in case you would like the updates while I'm away. And I'll see you guys again soon. Cheers. Thank you so much, guys.